Well, we're here at the FT Banking Summit 2016, and I'm joined now by Bill Winters, Chief Executive of Standard Chartered Bank. Bill, thanks very much for joining us. Morning. We've been talking all morning about the Donald Trump presidency and what it means for banking.
Yeah.
For an emerging markets focused institution like yours, there are a whole other set of implications stemming from particularly the Federal Reserve policies on interest rates and so on. What do you see as the kind of future for emerging markets, particularly in the light of the Trump victory?
Well, there's a few big themes that we have to try to understand as the policies are actually rolled out. The most obvious one is the effect of the new administration on global trade treaties, globalization broadly. At our core, we're a trade bank, so trade is good. I, as it happens, think that trade is good for the world, as we just look at the billions of people that have been lifted out of poverty over the past 30 years of globalization. So it would be with great regret that I would see that going into reverse. I think it's unlikely, actually. I think most people realize, including most members of what seems to be the administration that the president-elect is pulling together, realize that there are real values to free trade. But there are questions about whether the value is distributed equitably. So that's a whole debate that will play out, not just in the U.S. But that's a big issue. Obviously, the rhetoric around trade wars and the like, or unilaterally imposed tariffs on China, would be very impactful for the global economy and for banks like Standard Chartered. But it would be offset, no doubt, by other things happening. So we've already seen that the reaction to the apparent death of the TPP is quite a bit of enthusiasm for an intra-regional Asian trade agreement anchored by China. And I think the U.S. And the rest of the world can look forward to a regionalization of trade that was happening in any case.
What do you see as the outlook for the regulatory environment, partly as a result of the Trump victory? People think maybe the global regulatory agenda will change direction, it'll go softer.
Well, I think we've seen a number of signs that indicate a tension between those parties that at this point think that we should be going much further in terms of regulation, so more severe capital requirements or structural reforms, and those that are saying, I think we've had enough, at least for now, let's take a pause. And it's crystallized a lot around the Basel IV debate, so totally independent of the new president. There was a tussle, as it were, probably between the U.S. authorities and Europe to a substantial degree, but it wasn't, obviously within Europe there were relatively hawkish and relatively dovish approaches to Basel IV, some on technical grounds, some on basic economic grounds. So I think it felt like we were at an inflection point, or at least debating the inflection point in any case. If the voice coming out of Washington is incrementally less hawkish in terms of incremental regulation, then of course that's going to shift the likely outcome, at least on the margin. That said, the Federal Reserve Bank has a strong element of independence, and I think that's highly unlikely to be challenged in a fundamental way, at least over the short term.
So if the macro situation is potentially problematic on the trade front, we'll see. Potentially positive on the regulatory front, we'll see. Standard Chartered also has idiosyncratic issues.
Yeah.
You came in just over a year ago and have been putting to rights some of the problems that Standard Chartered faced. You've been de-risking the bank substantially. Do you feel you've gone far enough now in terms of de-risking, and should you be reprioritizing growth again?
We feel very good about the quality of the balance sheet, feel very good about the capital position, the liquidity position. We've tackled our expenses substantially, so we're dealing with that. And we stabilized the balance sheet and the income line. So, but stabilization, of course, is not the same as growth. Now, in this environment, are we likely to grow a lot? Not a lot, but there's things that we're doing now. The investments that we've made in the past year, and really the past couple of years, but accelerated in the past year, are generating income growth already. So there's a bright future for Standard Chartered Bank, despite the fact that the outlook in the macro environment is very challenged.
Bill Winters, thank you very much.
Thank you, Patrick.